As a trader, if you can understand the powerful combination of price and momentum, you're in a really strong position. Understanding this combination can help you to identify if you are in a really strong trend, if the trend that you're in might be coming towards the end, if the market is likely to reverse, and also there are some really subtle nuanced cues that you can get from this combination as well, such as was there a piece of fundamental news which you actually overlooked? Or is there something going on which hasn't even hit mainstream media yet? And it gives you a cue to be more cautious with how you proceed with the rest of the session. And the best thing about this combination is it can be applied to every market and every time frame. As I'm a scalp trader on the US indices, I'm going to be specifically referring to smaller time frames on the US 30 in this video. But if you're a day trader or a swing trader and you'd like to see a future video looking at higher time frames, then make sure to let us know in the comments below. If you're excited to learn about the power combination of price and momentum, make sure to give this video a little thumbs up before we get started. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well. So the momentum tool which I use is Heikin Ashi, and by price, I'm looking at key levels. So first of all, let's have a look at momentum on Heikin Ashi, and then we'll move on to price, and then we'll look at the different ways that we're looking for Heikin Ashi to respond at the different price points and what clues that can give you. So at the moment we have Heikin Ashi up, I usually trade on the 1 minute time frame on normal candlesticks to get a really precise entry. However, when I'm using Heikin Ashi, I tend to use it on the 5 minute chart just because I find that it works differently on different time frames. And sometimes on certain time frames like the 1 minute, it can give too many false signals. So I find that it works better on the 5 minute, which is why I use it on the 5 minute. I'm just going to show you on the side here. We've already got it up on the 5 minute. This is where I select Heikin Ashi. So this is what normal candlesticks look like. They show you the open, the close, and the extreme. So you get a really accurate reading with normal candlesticks. But if you switch back to Heikin Ashi, what you can see is the candles, although they look similar, they look slightly different as well. So what's going on here is it's using a slightly different formula. It's not showing you the open, the close, and the high and the low. And you notice how all of the candles actually start halfway up the previous candle. This is because what it's showing us is actually an average, and it's also showing us momentum. So let's break this down. Heikin Ashi can be reduced to 3 main candle types: bullish momentum, bearish momentum, and indecisive momentum. Bearish momentum, you can see right in front of me here, these red candlesticks and wick only at the base. Bullish momentum are these green candlesticks. They've got a flat base and wick only at the top. Indecisive momentum candles can be either color, so they can be red or green, and they've got wick at the top and at the base. So indecisive momentum candles are often at points where the market is slowing down or just about to reverse. So for example, if market was in a strong trend, it had a little bit of a pullback and then it carried on, that little bit of a pullback would be represented by indecisive momentum candles. If it was a really dramatic pullback, you might see a candle showing momentum in the other direction before it carried on up. But also, if the market was coming towards the end and it was going to have a genuine reversal, you would also see indecisive momentum candles before the market showed a change in momentum. So now let's have a look at how that relates to price. So effectively, what we're doing is we're drawing on key levels. So these are the points where we expect something to happen in the market. And then what we're doing is we're seeing how Heikin Ashi responds at these specific points. So I've got some key levels drawn on here. I'm going to talk you through a couple of them. A previous all-time high is a really strong level, especially if it was an all-time high for a really long time and then it got taken out. I always keep the previous all-time high levels on my chart because they're great price points. The interest rate decision for September high. So every time the market has a piece of really high impact news, this creates really strong key levels on the US 30. So I always draw up the highest and the lowest point of the big move that happens on those days. You can see we've got another previous all-time high down here, and then lots of unnamed levels. These I call day chart levels, and the reason for that is because I draw them on using the day chart. So if we switch back to the day chart now, and I'm going to show you how I draw on the day chart levels. So I use the horizontal line tool on Thinkmarkets. Along the side here, there's a drop down menu on the second one down. You can see horizontal line here. Because I use it so much to draw on key levels, it's got a little star next to it, so I can just grab it from my desktop at any time. So what I'm essentially looking for is the open and close of any previous day, which is close to where the price is at the moment. So essentially, I go on the day chart to do this because a cheap way of doing it is just to go to the top of the body of the candle and also the bottom of the body of the candle. Basically, just mark up the thick part of the candle. So can you see here, there is this one there. That's the top of the body of this candle. I'm going to grab another one here, and there is the top of the body of that candle. It's worth being fairly accurate because it works better when you are accurate. And then we're just going to go below this one here. Can you see there's a body of a candle there? There's the thick part there. And I'm just going to draw on a couple others as well. We can see there's the top of one here and also another one down there. So if we just go back to the 1 minute chart now, you can see that this cluster of levels down here has given us almost like a support level where the market has come to and reversed. So let's break this down. Just because there's a cluster of levels, it doesn't mean that the market is going to reverse, but often when there are a lot of levels in a particular area, you want to be paying attention to that area, especially if you've got something pretty strong around that area, like a previous all-time high. This shows you that something pretty big is happening around this price point. One golden rule when you're using key levels is that they should be thought about as being trampolines rather than glass doors. So sometimes you get a very, very sharp reaction precisely off the exact level. But other times the market will just go around that price point. Sometimes it's very accurate and sometimes it's not. So that's just worth being aware of. In this particular instance, you can see that the market made a very, very, very strong move down towards this cluster of key levels. So now let's go through what this can tell us as a trader. So first of all, if there's a big gap between key levels, that almost gives the market room to form a nice trend. So essentially what I'm doing is I'm looking to trade from key level to key level. If there's a huge cluster of key levels altogether, like we've got down here, I wouldn't be looking to place a trade within this cluster. And the reason for that is it's just far too chaotic and we're likely to get a lot of activity happening. So I would be looking for something above, or I would be looking for something below it. But within it is a little bit risky for me. My favorite scenario is if there's a really strong key level and several hundred points later, there's another very strong level. That space in between it gives me confidence that a strong trend can form in there. So the distance between the key levels is really important. And you can see if there is a strong key level and the market breaks through it, and you can see that we've got lots of strong bearish momentum. I'm just going to go to the 5 minute chart now, just because I prefer Heikin Ashi on the 5 minute chart. But you can see strong bearish momentum pushing down here. And as it approaches this cluster of key levels, it actually doesn't get into the area. It stays just above it. What you can see now is the market has actually turned indecisive. So we've got this cluster of indecision candles. That can be a sign that there is a potential reversal on the cards. It can also just show you that there's a lot of activity here, and sometimes that means that there's a lot of orders at that price point, and sometimes you can see what looks like a reversal but actually ends up just being a dramatic pullback. So just be aware of that. We have a candle which shows bullish momentum taking off to the other side. But can you see how this has almost been diluted by the fact that you have a whole cluster of different candles which show various amounts of momentum change? Now that's important to be aware of, because with Heikin Ashi, When the market is in a range, you will often see momentum changing quite frequently. It doesn't mean momentum is genuinely changing to the other side and that you should be trading in every single direction. You effectively want to see the first one, and if the first one gets diluted by a change back the second way, understand that you are probably just in a range. Now, another way that you can test what's going on there is to actually go up a time frame, because the smaller time frames that you're on, the more likely that you are to see false signals, which is why I don't really like using Heikin Ashi on the 1 minute, because there's too many false signals. But if you want to just dilute it a little bit, go up to the 15-minute, for example, and you can see that you don't get a momentum change on Heikin Ashi until this candle here, which is genuinely the one which would have signaled a reversal. So let's go back to the 5 minutes. We're going to look at another element of price and momentum, and that is when the market pushes through a really strong level with momentum. Can you see that we've got an interest rate decision at September high here? This is a really strong level, and to be honest with you, we would have expected that the market might have made a reaction here, whether that is a pullback or a sharp reversal, but it didn't react at all. It shot straight through. And can you see on the way back up, we do have a reaction at this point. We would expect that, but we didn't get one at all on the way down. So that is a sign that there is a fundamental factor going on, which is why the market is making a strong move down. If you see the market crashing through really strong key levels with momentum, that is a sign that something big's going on, and there is a reason why it's going down. So your first step is to check the economical calendar on Thinkmarkets and just make sure there was nothing big that you missed. If there was nothing big that you missed, and you can also do a Google search. I like to search for Trump and the Fed just to double check if anything big's going on, if there are any meetings going on. But if there's nothing going on that I can see, what that tells me is that there's something going on which hasn't actually hit mainstream media yet. So a really cool thing about trading is that you see the move in the market before you see it in the news, which means that you have to get really in tune with how the market moves when something's happened that we don't know about yet, because you need to know that it might be time to take a step back until you understand what's going on further. So now you understand the powerful combination of price and momentum. The next step is to practice drawing on the right key levels for the market that you trade. If you're a US 30 trader like me, I've made a previous video on Thinkmarkets talking through some of my favorite key levels for the US 30. So watching that would be the next step for you. Also, make sure to head over to the Traders Gym on Thinkmarkets to practice any new strategy or idea that you have on a trading simulator with virtual money. And if you want to see more content like this, make sure to subscribe to Thinkmarkets now as well.